All right, it's recording now, and I'll send a copy out a little bit later this afternoon. All right, so today, um, high probability option swing trading, long and short term, using our best strategies. So we're going to go over one, maybe two strategies, and then take a look at the longer term, medium term trades. All right, and just so you know, everything we're doing today is for educational purposes only. We are not giving you any specific trades to take or anything like that. What we're showing is how myself and Becky, how we profit from the markets. And we've been doing it for a long time. And I think for the first time ever, Steve is on the Zoom call. You've probably heard me mention the name Steve over the years. Steve is actually online. He's my number one trainee from way back when. It's probably been what, 20, almost 20 years now, Steve?
Uh, Longer.
Longer. Yeah, it's been, yeah, he was one. I was literally training him in exchange for like food and Pepsi and Gatorade. He'd come over to my place and I would work with him. So he was literally student number one, and he's been one of my former coworkers at Lockheed, and he has traded everything from stocks, options, ETF, futures, forex. He's done everything. I think he finally settled in with trading shares of ETFs, maybe some stocks and covered calls and options, and that's kind of where he's in right now. But he's done it all, and he knows everything works as long as you're consistent. All
Yeah,
righty,
well, it's good to be back. I need a refresher.
cool.
Yeah,
All right,
yeah, go for it.
all righty. So let's see.
That's good.
So this is a list of ETFs we trade. We only trade this list because number one, there are 1,000 plus ETFs. We trade this set because they have enough options to make them tradable with options. There are maybe four or five more we don't do, but these are very tradable with options. They have enough open interest and volume to be tradable. The ones that have very, very light options, the bid-ask spread is ridiculously wide, and you're going to be screwed on the way out. So these have high enough volume of and open interest to be able to trade more effectively. And we've become specialists in these. And today we're going to be focusing on the best of the best. That's the major indices. All right. So I'm going to switch to the charts, and we're going to go over what you see on screen right now, but on the charts, because this is what we're going to start out with the medium and longer term opportunities. And I want to spend a little bit more time on it than I usually do, since so many people have been asking about it. So I'm going to switch charts now and switch from the handout. And in the chat window, you will find the link to the handouts in the chat window. So just go there to grab those. And let me change the share. And let's see. There we are. Hopefully. Okay. So what you're looking at here now is the chart of the S&P 500. This is SPY, S&P 500, and it's a monthly chart. So every candle is 1 month. I usually start off reviews with this, but now I'm going to spend a little bit more time on it, like I said, since people have been asking about a more medium-term opportunity than longer term. So what we have on the screen is a 20 period moving average, EMA, and a 8 period EMA. This is kind of what we learned from a couple of different people, um, most notably John and Hubert from TradeTheMarkets.com way back when with the 8 and 21 crossovers. And then along the way, with some other groups, how to use these same moving averages for longer term potential trades. So what we're looking at here, whenever the market is above the 8 period moving average, it tends to pull back to the 8 periodically, and that's a buy point. So if you're a medium term type of trader and you want to place a trade maybe once, whenever, these are the opportunities to look for when the markets are pulling back to the 8 period moving average. It's not an exact number because it's moving. So anywhere in this neighborhood is a potential trading opportunity. It goes up, it pulls back. Anywhere in this neighborhood, potential trading opportunity, write it up. Pulls back, all right? And opportunity pulls back. We had two consecutive closes below. If you bought this on a pullback here, it's better to wait more than 1 month. So if it goes up, down, so it goes up, couple months later it comes back down. Those are the better trades. Couple months goes up, couple months later comes back down. This requires a little more patience if you're a medium term type trader. But if you're doing with options, what we do to optimize the option trades, this is a monthly chart. So when you see on the daily chart we get our buy signals anywhere in this neighborhood, you know you're probably going to have a nice big run up right after that on the daily chart level. This is monthly charts. So we can take a look at the monthly charts on a regular basis and see when seeing pullbacks to this level, and then look for our buy signals off the lower time frame, the daily charts. We specialize in daily charts. So that's what we'll be looking at today, and all of our stuff is on daily charts. So these are some of your bigger, better trades. When we go below the 8, retrace back up is a shorting opportunity. Go down, go back up to the 8, shorting opportunity with put options. You look for the sell signals on the daily chart. This is for the major indices only, Dow, S&P, and NASDAQ. This works really well for the major indices. Different sectors don't move all the same way. So just because you use one strategy effectively on gold doesn't mean that same strategy is going to work effectively on S&P and vice versa. So you really have to understand what you're using, and don't just assume blindly that one technique working on real estate is going to be the exact same technique that's going to work well on oil or natural gas. Okay. Um, so don't just assume that. Do your homework. See it, because you put up a different chart, it will not look as clean as this. It'll be more choppy sideways, and it doesn't work the same way. The major markets tend to trend more so. All right, like I said, every pull back up to the 8, shorting opportunity with puts. Pull back up to the 8, shorting opportunity with puts. This was the 2001 market collapse, and then we rallied back up with the 8 crossing above the 21 or 20 period moving average. Every pullback to the 8, buying opportunity. Every pullback to the 8, buying opportunity. Now, if you're a longer term person and you're not really looking at lower time frames, you establish positions anywhere in this area. That doesn't mean go all in right away. You could go like 1/3 of your position as it's pulling back, 1/3 of your position, and then it pulls back a little bit more, a second third of your position, and even as it pulls back more, last third of your position, average in. But you wait for the pullback to the optimal. You don't start getting long up here. Okay, you wait for the pullback if you're a medium term type investor. It runs up. You don't start buying up here. You patiently wait for a pullback to anywhere around the 8 and start establishing your position. You put a third of a position on. As it gets closer, a half a position on. Okay, and then you write it up and you can take profits, and there are different ways to take profit. Those type details I go over with in one-on-one coaching sessions. Say, and it just keeps going on and on. It'll keep writing the 8. As it's pulling back anywhere near the 8, you start establishing a position. This could be shares. If you're doing options, you better know what you're doing, because options expire. So this is great with shares, and it works really well with shares if you have a certain established risk and a stop loss. When to get out, or 2 consecutive closes below the moving average is always a good out. That's 2 consecutive monthly closes below is a good time to get out. All right. So, and that just happens over and over again for all the medium term opportunities. You can call it long term if you want, because some of these do last. Well, it's medium to long term, depending on your perception of what's medium and long term. Because you can keep getting in these and writing them up. If you're a long term investor, you buy, take profit. You buy, take profit at maybe use a Fibonacci retrace, maybe a 50% retrace of this move. You take profit. At 100% retrace, you take more profit, just keep moving stops up and stay in part of your position indefinitely. All right. But you take profit. You don't just hold on forever with no stop loss. I said, like this stuff I go over more one-on-one with people during coaching sessions, how to capitalize on this more effectively. This was our 2008 market collapse. Not a whole lot of retracing going on. There's one retrace up, one shorting opportunity, and then it just market dropped 50%. The market dropped 50% in a very short amount of time. So, and when I'm coaching people on the daily charts, what we do along the way is go back to this period between 2007 and 2009 when the market just got destroyed and go through the Dow, Nasdaq, and S&P and see how would our strategies have done during this time. A while back, I had someone bring me a strategy to review for them, and they said they'd done a back test. They back tested 5 years of the strategy, and it was like 90 something percent wins. They use these targets. I'm like, great. And it was a long only strategy, which is fine. So I asked them which 5 years did they back test. They told me the 5 years they back tested. It was like the last 5 years from a little while ago. So I told them, okay, that sounds great. So you back tested a long strategy during a time in the market when the market was just going up. They're like, yeah. So of course it looked really good. So I told them go back to 2007, start your back test there and tell me how your strategy would have done. It failed miserably. They would have lost everything because they were only back testing. It's like going here and saying, I'm back testing a long strategy. It's the best strategy ever. It just keeps going up and up. The market just keeps going up and I just kept making money. Best strategy ever because you back tested a long strategy when the market was just going up. You didn't back test a long strategy during this time when you're getting fake out buy signals that just went against you, buy signals going against you, more buy signals. So you have to back test during a time when the market has massive rallies and also massive declines to really know if your strategy is going to work or not. So all you people out there doing back testing, make sure if your strategy doesn't work during this period, then your strategy has some flaws. If you hear someone tell you, well, the strategy I have is only going to work for like a year or two, then we have to adjust it, then you have a bad strategy. I'll say it straight up, you got a bad strategy if you have to keep changing it. It wasn't adequately back tested to account for different market conditions, and you settled. So eventually, you trade those strategies, you're going to take a huge, massive loss. And it could be a big enough losses to offset to wipe out all previous gains. So whatever you're going to trade, make sure it works in volatile market conditions and uptrending conditions, downtrending, sideways. You shouldn't be getting too many fake outs. All right. So always back test. Okay. So now in 2009, the bottom of the market was reached and we were back up above the 8. And we've been above the 8 since then. Every pullback to the 8 is a potential short-term opportunity. A pullback to this uptrending 40, there's actually a 40 period moving average, excuse me, not 20. 40 period moving average is a buy opportunity for the long-term investors. Long-term investors. This is not an option trade. Now, you can get an option trade on the daily charts, and you'll probably get a nice rally off of it. And yes, definitely a good opportunity. But for the long-term people, buying anywhere around the uptrending 40 is the best time to just keep your powder dry and wait for that opportunity. Look at all these medium-term opportunities. Every pullback to the 8 every couple of months is a potential buying opportunity for the medium-term investor. Any pullback here, and then we look for the buy signals on a daily chart. We look for our daily chart strategies, the one we specialize in, to give us a buy signal sometime anywhere here, because it just went down, and it used to be a long red candle, then it came all the way back up to form an up. So anytime it's coming up, during that month, you're going to be seeing buy signals as it's going back up. Those are the good trades. Those are the really, really good trades that can really take off. And there are multiple opportunities here. So it's never exactly at this line. It's always in anywhere in this area is where you want to establish your position. If you're buying shares, then you buy them, you start establishing a position anywhere as it's pulling back. Because it's not exact. Anywhere as it's pulling back, establish your position. Anywhere as it's pulling back. Okay? This was 2015, 2016. Multiple pullbacks to the 40. Long-term investors, cha-ching. You're going to hear on the news the market's dropping, it's falling forever. There's something going on. You'll hear in the news every day. It could be economic this, report this, Fed that, war this, oil this. Something's going to trigger the market to pull back, and it's going to pull back for a buying opportunity. Don't get freaked out by news. For whatever reason, it's the job of the people in the news to scare people, apparently. Okay, they report what's happening that minute. They literally will report what's happening that minute. The minute that's over, they will forget everything they said yesterday. Okay, the market goes up the next day, they'll forget everything they said the day before. They report what's happening in that moment, and that's it. Then they move on. Don't get freaked out by news. Okay, understand the big picture. Opportunity. Every pullback's opportunity for the medium term or long term people who are either buying shares or if you're buying options. Do you want to get long on a buy signal up here, or would you rather get long on a buy signal somewhere down here on a daily chart? Okay. So people are always asking me, how can we pick and choose which signal to take, which buy signal? There's nothing wrong with taking the buy signal up here, except it might go against you for a month or so before it takes off. Okay. Or that might end up being the one that's the loss because you got to buy up here. It might still be a good trade, but not as good as waiting patiently for some kind of pullback and waiting for the best opportunities a little bit closer to the support levels. Here we are in 2018, pullback for the long-term people. Buy your shares, establish your positions. If you're doing stock, find stocks that actually move with the indices, not that have a total life of its own. All right. This was 2020, COVID. The market pulled back for a whole 3 weeks. Massive pullback. It looks scary. People thinking, oh, the market's going to go down forever. It's going to go down forever. It's going to go down forever. Opportunity. Opportunity. This was literally a 3 week pullback. Then this just took off. The pullback to the uptrending 40 is a long-term investing opportunity anywhere in this area. 2 consecutive monthly closes below, then you have to assume it's going to go lower. And that was one of the biggest rallies ever. And that was COVID shutdown. Don't get freaked out by short-term news. All right, this pullback, what you're going to hear on the news, it went from 480 to 350, 20 something, was a 20 something percent pullback. As soon as you see this, you're going to hear on the news, we're in a bear market now, and there's going to be recession, market's going to fall forever and ever and ever. Don't get caught up on that. All through this, we have our sell signals and we have buy signals. We have both buys and sells. We trade what our signals give us, and that is what we focus on, not the chatter on the news. Okay? The market pulls back, but the only thing that ever says we're in a bear market now because they dropped 10% means nothing to us whatsoever. It's just stuff, copy they give the people in news to read. People in news have no idea what that means either. They're just reading what they're given. But we look at our trade signals during all this period, and we're going to have long, short signal and short signals. We take our trades. All right. And buying opportunity at the uptrending 40, if you're buying shares, or if you're buying options, look for the buy signal anywhere in this area. Once you're above the 8, look for buy signals. Those are the best ones. If you're picking and choosing, you pick the ones that are close to the support levels. This was 2025. April 2025, market pullback. I remember when this was a red candle down to here, and we had a meetup, and I remember telling the people in the meetup, the market's going to drop about 10% more. So keep your powder dry. It's going to drop maybe 10% more, and it did. And it just bounced up and rallied right away, dropped 10% more and took off. Don't get freaked out. Pullbacks are opportunities if you know what you're doing and what you're looking for. It's not something to freak out about. It's opportunities, especially if you have a long-term perspective. You live for this. You live for those pullbacks. You're looking for something to make the market go down back to here. And those are your opportunities big time, whether on daily charts or monthly charts. Long-term people salivate when you see this happening. Establish your positions anywhere in this area. Shorter term people or short-term people, look for your daily chart buy signals anywhere here and don't question it. Market's going to be going down, 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 not hard down. It's going to be a big old gigantic red candle. And one day it's going to bounce back and give you a buy signal. Get in. That's the time. Um, I always think back to, since I'm a Marvel Comics fan and Avengers fan, and Avengers Endgame, when they asked Doctor Strange when he saw the future, and out of the 14 million potential futures that could happen, and how many of them did they win? And he went, one. Out of 14 million potential futures, they only won in one situation. This would be the one situation. If you had to pick one, the market's dropping, dropping, dropping. You think it's gonna keep going down forever. But because we've gone over this, you got your daily chart signals, and when looks like it's the worst possible day, worst possible week or month, this giant red candle is going to keep going down forever. All of a sudden, on our daily charts, we get a buy signal. That's the one. That's when you start taking the trades, and when everyone's freaking out and going short even more, we're capitalizing on the opportunity we're getting in down here and writing this up. I know one person in particular who caught this and cha-ching. They had actually 8x return on their options because they just nailed it. All right. And look at this. Here we are right now as of Friday. We have pulled back to the 8 as of this Friday. We don't have any buy signals yet, but if we get a buy signal anytime in this area, anytime, then it'll be time to get long and just keep this pullback, get long. Now, it could go right now. We have, like I said, we don't have any new buy signals. We have some other buy signals that have gone against us. So I think there's a really good chance this could just bounce and keep going up. People freak out because they see the news. I always tell people, turn the news off. If you didn't know about anything in any foreign country, if you didn't know about any government policy, and all you're looking at is a chart, that is what we use, not what news a network happens to be covering today. Out of the thousands of things going on in the world, they'll pick and choose certain things they want to cover. And why do we all think that's the only thing in the whole world driving every economy, every market? It's only because that's what we're looking at in the news that particular day. Don't get stuck on news. Things Stay with your charts. The charts will tell you what you need to know. That's what we've always done. All right. And I'm gonna go back to um, the one of our spreadsheets handouts. And first I'll go back to the handout, then I'll go back to a spreadsheet and show you how we actually do this stuff. I know there's some new people. If you have any questions, feel free to unmute at any time. Just ask it. If you type it in the chat window, I'll eventually see it. But don't raise your hand. Just, like I said, just unmute or type it in the chat window and I'll see it.
Ev,
Yep.
do you have that chart template? Is that Ninja Trader or
This is
which one
Ninja
is it?
Trader. It's not really a template. It's just
You
you
would
just create a chart with a monthly chart with a 40 EMA and an 80 EMA.
8 and a 40.
Yeah,
Okay,
EMAs, and just put those two moving averages on the chart and make sure you set a time frame to monthly.
monthly. All
Monthly.
right.
And you may want to make your background color different so you know you're looking at a monthly chart and don't mess yourself up. So you make sure you want to differentiate it from the daily chart so they don't look the same. Because
Okay, I know I had one of these at some point in time.
yeah.
Where it is now.
All right, so I'm going to switch back to the handout for a moment, and then we'll go to trade listing. All right, so we're back to the handout. So this part is what we just kind of went over to give you a feel for the medium term and long term. Um, Steve still does medium and longer term trades. He uses the weekly charts also and trade shares plus options. I focus on daily chart trades on futures and options. Becky does mostly futures with some options on daily charts. And this is one of the new strategies. Um, no matter if we change strategies, the general trade management stays the same, and it keeps the P&L kind of the same. So I'll go to the chart, back to the chart now, and show you this strategy. We went over it once, I think, a month or two ago, and then I'll come back to the handout. Okay, so let me change the share. It's just easy to do it on the actual chart. All right. So this is SPY, S&P. The S&P gives us our S&P, Dow, and Nasdaq give us our best results. Although we have 28 ETFs, those three are really stand out as the best when used in combination. So as far as win to loss percentage, we average of extremely high percent. I'll show you in a little bit. But what we're looking at here, volatility bands at the bottom, a Donchian line here, and volatility bands at the top. This, and you'll see the colors are red and green, regardless of whether it's up, day, or down day. There's an indicator we have called a super trend indicator, and it gives the candle a directional bias, regardless of whether it's an up day or down day. And you're going to find we use that in quite a few of our strategies in different ways. So this particular strategy that's in the handout, the super trend sector ETF buy, it's used on the Dow, Nasdaq, and S&P. In particular because it gives us the best results. So what we're looking at is, and we learned how to buy market bottoms a long time ago from our Forex trading. There's someone we learned from how to find market bottoms when trading foreign exchange currencies. And what we did was apply the same concept to our charts for options. So we're looking for a significant move lower. This is a multiple standard deviation move lower to the volatility bands. And then we're looking for a buy coming off this pullback. So makes an extreme move low down a couple of standard deviations. Then we look for the first candle completely above this Donchian line. So you want the low of this candle to be above this yellow line, basically. So after touching or going through the volatility bands, we look for the first candle completely above this line. And we have two different squeeze indicators here as confirmation, different settings. They're not standard settings. But we make all the charts available for coaching clients. So if you're doing one-on-one training with me, I make all the charts available to you. On NinjaTrader, which is free to use. All we use NinjaTrader for is for the charts. It's free, and it's great for doing the analysis. For a lot of the option strategies, we can also use Thinkorswim. And that's it for this. It's a first candle completely above. That's our buy signal. The ATR that day, average true range. If you look at the data box, the ATR is 12.14, 12.14. So that's how big our first target will be. It'll be $12.14 above the open price this day. So if the open price this day is, Becky, can you pull out a calculator and give me a number? If the open price this day is 677.63, open is 677.63, what is 12.14 added to 677.63? Can you type that in the chat window? Again, the open price is 677.63 and add to that 12.14. Can you type that in, Becky, in the chat window? What's that value? So that'll be our first profit target. Again, the open price is 677.63 and add to that 12.14. Olga, thank you. 689.77. So if here's our day, we call our signal day. And to identify signal day, simple. Did it close? Did we have a candle completely above the yellow line? No. No. Candle completely above. Nope. 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 Hey, that's what it'll look like. Okay. It'll look just like that. And now we know we have a trade signal. Then we go to our trading plans. Our trading plan says this is 88% winning trades if we take a 1 ATR target from the open price the next day. So I think it's actually higher than 88%. But a 1 ATR target, and the target is going to Olga 689.77. The high this day is 681, high is 683, 686, high 689.25. So it reaches the high over here. Here is the day it hits the target. Okay. And guess what? There are going to be other trades in this time period also. There's just one strategy. We have multiple trades going on. We only buy calls and puts. We do not, as long as you follow certain pricing guidelines, we don't really worry about time decay. Okay. Some trades will give you, there's always time decay. But with the ETFs, there's the implied volatility is so much lower than individual stocks. We don't have to worry about a volatility crush. We can just buy calls and puts, and it works really well. You don't know what the return is going to be, but it could be anywhere from 5% return to first target to a 50% return to first target. How do you get 50%? Markets gap, and all of a sudden, what you thought was going to be a 10 to 15, 20% return becomes a 40 to 50% return. Some will have more time decay. It might be a minus 5%. It might be 2%. It might be 8%. So things really balance out because people, whoa, if I buy this, there's going to be time decay. Oh no, there's time decay. Yeah, there's time decay. But you have to think about the big picture, not a trade. If you're worrying about a trade, about one single trade, then you're probably massively over leveraging your account, or you don't fully understand how to allocate dollar risk per trade, and you are risking too much on one trade and worrying about it. So you want to only risk a certain percentage of your account per trade, and so any one loss is never a big deal. Even a partial loss from time decay is not a big deal because you're going to get some wins that are hit a first target. It might be, let's say, minus 5%. The next one is plus 5%. Next one is 20%. Next one is 25%. Next one is 40%. Next one is 7%. And that's but literally at 88 to 90 something percent wins, you have so few losses. Those wins add up. When you got to look at the big picture, and for coaching clients, I'll send you a spreadsheet for someone who did that so you can see what the numbers look like, but it adds up big time just by not taking full losses. So, but as far as like this one here, the close above would not have been valid trade because when it went down, it didn't touch the lower bands. This one will be valid because it went down, touched the bands, and then closed above the yellow line. Good trade. These would be the big trades because they gapped and gapped. These are the type of trades where you're going to get a 30 to 50% return on the first profit target. The ATR may only be 9.7, but a gap and a gap, those are the ones that amplify the profitability because gaps add that volatility and everything gets juiced up as it moves in your favor. There we go. Touch the lower bands, first candle above. Touch the lower bands, first candle above. This trade would have taken about 2 months. And we usually have 1 to 2 months worth of time. And this is something I go through with people for coaching clients because you can't just go buy long options, then think it's going to work unless you have certain pricing guidelines, because if you pay too much, you won't make any money. There'll be time decay, you won't make any money. So pricing guidelines. And but here is a big thing with this. Let's say we took this trade here. Okay, the target is 20, the ATR is 29. So your target is 29 points above this value. It opened here and it opened at 544.05. Okay, give me a target, please. Can someone type it in? What is 25 points? Here is the ATR. What is 29.42? 29.42 added to the open price of 544.05. So add 29.42 to 544.05. And type it in the chat window for me. Again, add, that's ATR from the day we have the trade signal, 29.42, and add it to the open price the next day of 544.05. What's that value? Someone please type it in. Again, 29.42 added to the open price of 544.05. 573.47. Thank you, Becky. Okay. So you place this, say you got in, you got this trade signal, and you place this trade the very next day, and the market immediately goes against you. And it takes a couple of weeks, but you have a 29-point target, and the target is 573.47. This 573, and it hits the target right here on this gap. I actually recall being in this trade. And I remember getting about a 60% return on it actually on the gap, because it gapped and it gapped. It was about a 50, 60, 60% return. Here's where your targets hit with a 29-point target. Now, you don't have to get into the trade the very next day. We all have lives. We have lives. We have things we're doing. You will not be in every single trade just like that. Steve, I'll use you as an example. Let's say Steve goes skiing because Steve likes to ski and he's away for several days. And he comes back this day and sees, hey, there was a trade valid a couple days ago up here, and the target hasn't been reached yet. And I can still get into this trade because as long as you're below the entry price and the target hasn't been reached, the trade is still in play. So the entry would have been at 544.05, anywhere at or below. But time you come back, the market's down here, and here it opened at 521. So what's that? So instead of an open of that's 13, about what's that? 17 points lower, somewhere there. So you get into trade down here. So now instead of the target being 29 points, add 17 to that, 39, 40 something points higher. So now you're getting in with a 40 something point target on your option trade, long option trade. You buy your calls down here. Instead of the target now being set to 25 points, excuse me, to 29 points above, it's now being set to 40 something points above. So now your target is 40 something, so about 47 points higher. That's now your first target. Now you're looking at more than doubling to tripling your money at the first target. Just by luck, just by being patient, just by getting in at a lower price. You can, instead of having a 15, 20 something percent return, you're looking at 70, 80, 90% or doubling your money at the first target or more. Okay. Is there a reason for taking a one expiration cycle trade over two expiration cycle trade?
Well, it goes along with what we were just talking about. I mean, if it's going to run up, it might run up more if you wait if you extend the expiration.
I have actually seen, I always recommend two expiration cycles. Any stats we release will be based on two expiration cycles, not one. One is a business decision. The options are cheaper because
Yeah.
there's less premium you have to pay for, but you also
Yeah.
have more losses. In the
Well,
long,
I know with the S&P and QQQ, I mean, the option prices are usually pretty expensive.
they're expensive. However, the targets are bigger and the bid-ask spread is pretty reasonable. You don't get screwed too much on the bid-ask spread on the Nasdaq and S&P options. But time is key. If you want to see the same type of win-loss stats we publish, that's all based on two expiration cycles. I found that people who do one expiration cycle usually have uh, a smaller account, frankly. They can't afford. They try to budget what they have. So if going like one expiration cycle basically is 1 month, then and they have a smaller account, they can buy some less expensive options and going out. And there's always an option for one expiration cycle out. For some of the other ETFs, there may not be one expiration cycle, meaning 1 to 2 months. There may not be an option available 2 months out. They may have to
Oh
go
yeah, well,
6 months
I
out.
see that all the time.
Yeah.
There's a yeah,
Yeah,
or there's no open interest.
exactly. So for some of the ETFs, if you go out two expiration cycles or three, there may not be any available at that time at all, or you are the open interest. You are the volume if you take the trade. But with the Dow, Nasdaq, and S&P, there is always an expiration 2 cycles out. Always something to trade. They have been around the longest, but other ETFs may not have those options available yet. But the Dow, Nasdaq, and S&P has always has something available to trade. One expiration cycle out, two expiration cycles out. If you can afford it, great. Otherwise, you trade one of the other ETFs like XLI or XLK, which after the last stock split makes them even more reasonable price-wise to trade. Those are great ones to trade. I'll take a look at those in a second also. But anyway, that's how we place trades. It's literally you find a buy signal. Whenever you get in, you get in. If you miss the trade, you miss the trade. If you get in a pullback, even better because where you would have a 15, 20 something percent return, maybe getting in here, now you're getting because you're getting in a much better price. Think about you're going to be what? How many strikes in the money by the time that hits? Okay. And that price is amplified really, really fast, just being patient. And you can even take profit earlier if you wanted to move stops up on remaining contracts. You don't have to wait to a 40-point run up. At a 20 something point, you can take profit and just move a stop up on remaining contracts. Right. And still have a very nice trade going on, which is basically a free trade with no risk. If you once you take profit, move the stop up, you have a risk-free trade going on and you can let it ride. You move your stop up. This one you could have ridden for a while. These happen a couple times a year, maybe two, 3 times a year. You get these big old run-ups like this where it doesn't pull back. And those are awesome. It could be long, it could be short, but a couple times a year, maybe 2 or 3 times, you get these type of trades. You catch those. You don't know which one will be it, but like I said, 2 or 3 times a year, you get nice runs like this, usually after a decline. Usually after a decline. All right. So that's one of our short-term strategies. I want to switch over to the spreadsheet to give you a feel for how many trades we actually have. And the spreadsheet is also on our website. So you can download it. You can literally just download it there. If you go to where you see the handouts in the chat window, that same site has the spreadsheet we're looking at right now. Um, this is the best of the best. The Dow, Nasdaq, and S&P plus um, its younger cousins, XLI and XLK. XLI is probably about 90 something percent correlated with DIA, the Dow. And XLK is also 90 something percent correlated with the Qs, the NASDAQ, except it's a whole lot cheaper. Okay. So this is a listing of trades valid up until this past weekend. Basically, what's been win-loss status for the ones for trading XLI, DIA, QQQ, SPY, and DIA. These are all the trades valid and the status. It's overall, we did it from 2019 to 26. However, realistically, this listing goes back to the year 2000. So we have all the trades listed from the year 2000. I'd asked Becky to put this together so people can actually get a visual for what their account should look like. So we update this each month and send it out to coaching clients so they can double check their trade status against what we're seeing. If it says something is a win and you have a full loss, then something's wrong. Okay. And a win means the first target was reached. Just like that example we just went over, 10 different people could take the exact same trade, get in a 10 different strikes on 8 different days, and all have different profitabilities. Okay. Because once the is valid, it's a matter of picking your time and day to get in as long as you're below the entry price, which is the open the next day, and the first target's not been reached yet. There might be a several hour, several day, several week, or month time period where you can still get in because you're below the entry price. So, but a win can vary in percentages depending on when and where you happen to get in. That's why 20 different people taking the same trade will have 20 different results, and they're all valid results. It will not be like anyone else. So if you go through your download spreadsheet, go through it, you can see the win-loss status. And I said the major indices produce the overall best results. And you can see all the wins. There might be a few cluster of losses. Usually the losses come like right around the bottoms when things turn around, or right on the top when things turn down is when you usually see losses. 2022, we had all the losses happen within like a 2-week period, and then it was all back to wins again. So all those people freaking out during COVID year, it was one of our best years of trading, frankly. Really was one of our best years of trading. We had a couple of losses in 1 month, and the rest of the year was just spectacular trading for 2020. 2020 was when I had a whole lot of free time on my hands. The only thing I had to do was trade, and one of my best trading years because I had nothing else. I just focused on my trading, and it was just everything was hitting, futures and options. It's just like bam, it was just worked. And on this spreadsheet, we also break down the big three by year and overall. So for Dow from 2019 through now. So on this first spreadsheet, let me scroll back. So we got the Qs and DIA and the total number of wins and losses. The average is 90 something percent usually, right? And so it's all broken down by year and by symbol. Here's XLI and XLK, also extremely good. So even if you have a smaller account, you can't afford to trade DIA and SPY and QQQ, everyone should be able to afford XLI and XLK if you're going to be trading options. So if you're going to be trading options, it's a couple $100 a contract, and we always trade the first in the money option. So, but yes, it's totally broken down by symbol also, so you can go through this on your own and download and take a look at it. And for 2025, these are all the trades, not just X. This is if you're trading everything. So this is the full, I haven't sent this out yet this is the update through the end of this past month. I've not actually emailed this out to people yet, so some of you are seeing it for the first time, but this is the final update through end of 2025 with options that might have still been in play, and we're just updating a few statuses. But here's the total numbers for 2026. Overall, 85% wins, 89% wins on the long side, and 80% wins on the short side. This is trading all 28 ETFs with all of our strategies combined. As long as you're consistent, as long as you place, if you can place 7 to 10 trades a month, you're going to make money. It doesn't even matter what you trade. Just place 7 to 10 trades a month, you're going to make money. And by following my basic guidelines. If you're going to trade a smaller subset, that may be all metals or all energy or just the Dow, Nasdaq, and S&P, there are going to be fewer trades, but like the listing I just showed, there are fewer trades, but really good trades. But consistency is key to everything. But try to get in 7 to 10 trades a month, and that's the sweet spot. It's a purely a numbers game. Some will make you less, some will make you more, but the numbers balance out nicely so that you end up being profitable. And those profits add up so fast, so you don't even realize it till you look back and see, wow, it doesn't even matter what you trade. Just close your eyes and pick an ETF and trade it per plan, per the rules I set up, and it's hard to not make money. Um, this is 2025. We got a couple of losses from October. Those are the ones that would show up in like January or something. And then we log them as losses. All right, just keep trading. You're gonna have maybe 2, 3 months a year of losses, offset by 2, 3 months of wins, and the remaining 6 to 8 months of the year is represents your profits for the year. I say that when I say that, it makes it sound easy, but when you're in it, it's messing with your head. But think about it, you got 2 months of losses, 2 months of wins, they negate each other. Those could be the first 2 months of the year. And now after 4 months of trading, you've made $0, so 8 months left. Follow the rules. The remaining months of profits, that's your profits for the year. And but you got to keep trading, got to keep trading. And as a coach, that's what I try to get people to do, is to keep trading. Even when you take a few losses, you start second guessing yourself, you second guess the system, second guess me. And as long as you're following this trade management rules we established, you make money. Um, and it just works. Steve, I do know that you trade less than stuff that's less than 83% once in a while. Have you noticed any noteworthy issues or concerns? Because you've traded everything. Any commentary on anything you've done that would be like, because we got some new people on here too. And any words of wisdom?
Oh, I did have um, something I wanted to ask you. I
Okay.
can't remember what the heck it was. Oh, EWG is a good example.
Okay.
Okay, I should have, hindsight's 2020. Um, it didn't hit the target as far as I
Okay.
know. It was like 95%. Um, I should have, I should have took profit,
Okay.
because now it took a nosedive. I don't know. It could still come back. The target's still within this month, I think, on that particular one. But I believe at maybe it's wise if you're very close to the target, maybe you pull out a little bit. I don't know. I mean, I don't know if that's good advice or bad advice, but in that particular one, EWG, if you look at it, I was close to the target. If I would have sold one share, maybe I wouldn't have taken a loss. Doesn't necessarily mean it's a loss yet. I mean, it could
Yep.
still come back. But that's the only thing my comment is, do you need to be very strict on your target? And I think your recommendation is going to be yes, because the target there for a reason. But I mean, there's that's one example. I'll leave it at that. What
Okay.
do you?
Let's say did you enter at the open or at a better than expected price?
I usually, the day that the trade, I'll get in if it's close or just slightly above the open.
Okay.
I'll usually get in.
Okay.
I I I don't usually wait for it to fall back. I mean, I've come in at times and, oh wow, it took a nosedive. I've done that a handful of times in the past where, yeah, okay, it's way under the entry, so yeah, let's get in, and lo and behold, it goes up and hits the target anyways.
Yeah.
But generally, I just jump in the day if I can get it. It's not crazy way up above. what it closed at on Friday or the day before. I do some daily trading as well. I'll just get in.
Okay.
I just get in if the option price is about what it was the day before. You know.
Okay. So there's no right or wrong. In an ideal world, you just put your target in and walk away. Um, but if you are at your computer and you're looking at it all the time, it'll mess with your head.
Yeah,
It will.
that's a fact.
It will. And sometimes it's just from a mental perspective, it's so close to your target, you're making money. If you leave it on, you might make a few pennies more. It,
Mm.
basically, relatively speaking, sometimes you can just move your stop loss up. You can move a stop loss up on the whole position or part of the position, or just take profit like you were saying on part of the position and move your stop loss up on the rest.
Yeah,
Because let's say you had 10 contracts, and it's close to your target, but you're like, oh, yeah. There's
yeah,
no there's no problem with selling 6, 7, 8 contracts, lock in profit, and just move up your stop loss on put a stop loss in on the remaining contracts with a
yeah. I know, but what you're saying is not really black and white either.
yeah, exactly.
So there's oh, I could have, should have, would have, but it's not black and white per the target per plan. So
Yeah. Yeah, no right or wrong.
whatever.
Yeah, that's why I like to just put a target in. I don't look at this stuff during the daytime. Once I
Yeah,
place a trade, I have a life to live.
yeah.
I
I hear you. I
yeah,
hear you.
I know you have a life too, so
Oh yeah, you probably don't know, man. I got married.
you did get the same person, right?
Yeah, that's
Okay,
me.
just checking. It had been a while.
Hmm. We're in a new house now in Fairview.
Oh, cool.
Yeah.
Yeah, I've known Steve since 1990 something, I guess, back at Lockheed. Um, but yeah, he trades everything and he's done actually well with everything, even covered calls. I
Well, yep. This should be a good year, right?
Every year is a good year. It doesn't matter if it's going up or down. As long as there's something driving the markets, we'll make money. It doesn't matter if it's up or down, something's driving the markets, we'll make money.
Yep.
But
That's for
don't
sure.
get stuck in your head or anything. Up. The You can make a whole lot if the market goes down also, following our rules, just like you see in the spreadsheet here. A lot of these are short and long signals. It doesn't really matter. We follow our trade signals. This squeeze setup is literally for market tops. We find every market top with this strategy. Every single market top will create this signal.
How
Every
long we been in a bull market?
We've been in a bull market since 2009. It's been rallying with periodic pullbacks. I call bull market off the monthly charts only. I don't look at daily and weekly for that. That's just purely off the monthly charts.
Right. Yeah.
We just have the
That first chart, basically that first chart you showed
yeah.
the 840 or whatever.
Yeah, as long as we don't get two consecutive closes below that 40, that hasn't happened. It might seem like it was going to happen during COVID year, but then a massive rally. So two
Yeah.
consecutive closes we're going to have, but we haven't even come close to that in a long time, having two consecutive closes, monthly closes to really push lower. We have some events that make the markets pull back once in a while. That's normal trading.
Yeah.
Like I said, don't get caught up in all the stuff you hear on the news and everything. Just know that follow your
Well,
trade
I don't bother
signals.
watching that anymore.
It's entertaining once in a while. That's about
I,
it.
I get some pops on my internet browser, and I have to look at. But
Yeah.
yeah.
So
Anyways,
I want to get back to the handout. If you have any questions on this stuff, the details, I go over in like instead of with coaching clients one on one. I don't do groups settings, anything for when it comes to actual coaching. Purely one on one. As I found out, with different people, you may have to explain the exact same thing several different ways for it to register. So as a result, that's why I like to work with people one-on-one so I can find the right words for that person. Um, the things I think are easy, sometimes people think are difficult. Sometimes I think certain things are difficult and they pick it up like that. So everyone's different. So these are just two examples of that super trend strategy. And you'll see these trades listed on the spreadsheet, which you can download. It will show the different strategies we trade. We trade a group of 6 or 8 strategies when combined long and short. So we basically find market bottoms. We find to buy market bottoms. We have strategies once a market is moving up to find new buy signals, and once a trend has been established, we find new buy signals. Same thing going down. The ETF squeeze deal, we find market tops, and then once a trend down is established, we have other setups to find more signals down once a downtrend has been established. So we're trading bottoms in between and tops up and down. So, and like I said, I go through the 2007 through 2009 period with all coaching clients. Make sure you understand that how you can actually go through and see all these things work in various markets up and down, not just one direction. You got to be able to trade up and down to really capitalize on markets, and it's not that hard. Just need someone to show you. And in the handout, we have a huge example of the SPY um, and QQQ and DIA. The summary, actual trade listing is on our website in that spreadsheet. So you can down. I'll show you that real quick. Some of you have not been there. And feel free to download the spreadsheet, ask me questions, call me, email me. Here is our website. The link is in the chat window. Here are the sector ETF swing trades. So this is the spreadsheet we've just been looking at. So you can download that there. All the trades listing is on that spreadsheet. So you can feel free to put those into a spreadsheet and manipulate those all you want to see what's valid when. And the full listing, I'm not sure if I put the full listing on there, but if you scroll down a little bit now, oh, here we are. The 2025 trades are on there also. And it goes back a few more years than that also. We got a weekly trade listing and here are the handouts. So so that's readily available for you to check out, and you can compare that against stuff you've been doing. And we can probably meet them in another 2 or 3 weeks when we'll focus on futures. If anyone's interested in working with me on this, please let me know by this Friday. I only take 1 or 2 coaching clients each month because since I do everything one-on-one, I have to make sure I allocate and have enough time allocated for each person. We set up meetings based on mutual agreed upon times. I'm flexible on most mornings and a lot of time in the evenings and some afternoons. So usually 1 to 2 hour sessions. First session is to get your computer set up, get all the charts set up, get all so that your computer matches mine, whether using Thinkorswim or NinjaTrader or both. Either one's fine. And we get that all set up. I will give you the charts so you don't have to do anything yet. You don't have to do anything yet on your own. I will give you all the charts. It's set up so that everything matches. We all have the still the exact same thing. The analysis platforms are free and easy to use. For the options program, it's $17.50. We go through 8 swing trading strategies, and like I said, everything is one-on-one. I'm taking $250 off this price today or this week. So it's $17.50 minus $250, so it'll be $1,500. I don't put a time period on this. You'll see something that says, well, within 6 months. I don't really care about the 6 month thing. There are people on this meetup right now who I've been working with for a whole lot longer than 6 months. A lot longer than 6 months, at least 12, 11, 10 years, some people. Okay, so just whatever amount of time we need to get you to us to be consistent and profit, and that's the key. What I need from you is to commit at least 3 to 6 months of trading the strategies to see how the numbers work themselves out. because there are going to be times when everything's going to be going against you. You're going to be freaking out. It's going to be this isn't working, but somewhere along the way, you might have 15 trades on at the same time. They're all going against you simultaneously. You think this is just not working. You're freaking out a little bit, but somehow, some way, all of a sudden, 80% of those, 80 something percent of those will end up reaching the first target before expiration. And you would have suddenly made money even when things seemed impossible. And that's what I like about this stuff is just put the trade on, following the rules we established, and all of a sudden good things happen. And they do. If you're interested in also the futures with me, that's 1745, and I'll take 250 off this price. But if you're doing both options and futures, I will take 750 off the combined. That's the best value. All right. Um, so just let me know. And like I said, I go through this with you. Everything is rules based. See, I got a question here. Okay. Then no discount codes. Okay, still no. Okay. Different chat stuff. Okay. Um, so just let me know if you're interested in working with me before this Friday. Because that's when this particular discount will end, and then we'll probably do another meetup in about 2 or 3 weeks, and that will focus on futures. We have all the new future stuff is awesome too. So we added a couple of new strategies just to add more profitability. And it's like we added a lot more people wanting to trade SPY and DIN QQQ. So we added some strategies just focusing on those also, like we did today. So a few extra things to focus on the best of the best. All right. So unless we have any questions, I want to wrap it up for today and then be back here in 2 or 3 weeks. And then we'll go through some futures and then ask any questions along the way. Call me, message me, email me. I'm readily available. If you want to work with me, ask any questions about coaching. I'd like to talk to people in advance so we make sure we're on the same page and your goals are in line with what I can actually help you with. And key is consistency. All right. And see you all in about 2 or 3 weeks.
All right. Take care. Have a good one.
You too, Steve.